S&P 500 daily index. The index, when we topped out up here, this is at 1370 handle. When we came down in the trend, there's always a counter trend, and we had a couple of days uptrend. The thing that we're saying is in this bar right here today that this is a bigger sell through today than it was in the original reversal that we called for. There's the counter trend. So this is what we want to see, because this is where the bear trends start to set up. And it always sets up with intraday increased selling pressure. Right now, to 20-day simple moving average sitting there. When we were overbought for the prime correction over here, time to come down. Back in February, once again, just to recap, this February top right here was a wonderful short. And we came down and we put a bottom in those days and we bounced on the S&P. The 2011 bigger one was right here. That was just a pullback. This is where this top, this was where the trend started down, right here. It comes down, it makes a counter trend, it never took out the high, but it made the lower low in that cycle. Now we came all the way back up. We had a very small 1, 2, 3, 4, 5 day pullback, and we made all-time highs here. Now, one thing that we're going to be clear of, now that we've gone through that history, MMTs, is that these topping patterns like this was that short, this is the counter trend. This daily bar is big. Tomorrow, we look to see if they gap it below it. The 10-day moving average is rolling over. We've got the percent DS coming down off an overbought area. So when we were calling for the correction, we were overbought. Now we're not going to be so overbought on this daily chart. And as far as the weekly chart goes, just stay tuned, because the weekly has a lot to say. We just want people to see how trends work and how this low will be taken out from the original reversal coming down. Bigger selling happens when this low is taken out.